Hello everyone, today's video is all about investing, and particularly one of the ways in which companies raise funds from shareholders is via what we call a placing. So what exactly is a placing? Well, it's typically used by companies where they want to get their hands on money quickly. So, for example, a lot of companies undertook these share placings at the start of the COVID pandemic in spring 2020, when all of a sudden their revenues, their business was suspended overnight, and their revenues went, often in some cases, down to nil. They had to go and get access to cash, and these placings is one of the things that they did. So how does it work? So typically brokers will go out and find investment from willing investors, and what they do typically, they will offer the chance to buy new shares at a discount to the market value to make it attractive for these investors to get in. Now, what tends to happen is that they will offer these, and when the book is full, then the subscription round is over, and they tend to be very popular, not least because they are offered at a discount to the market value. And now it tends to be that most of the action goes to institutional investors, so pension funds, fund managers. There tends to be not a lot of the pot available to retail investors, so the likes of you and I, if we're wanting to buy shares in these companies to put in our SIPs or our ISAs. We've got to be quick off the mark to get involved, and I'll tell you about that in a moment. But basically, the institutional guys, they get most of the action because it's a lot easier for these companies to raise money by getting large amounts from a select few rather than go to thousands and thousands and thousands of shareholders and trying to raise money that way. And the other thing is, as well, of course, that when it comes to retail investors, as far as the company's concerned, they don't have visibility as to who the entire shareholder list is, because a lot of people probably don't know this, but actually when you buy shares in a company, technically the investment platform acts as a nominee and owns the investment on your behalf. So the likes of AJ Bell and Hargreaves Lansdown. So from a visibility point of view, as far as the company itself is aware, you are not down on their listing, their list of shareholders. It's basically the platform that you hold the shares of, even though, legally you are. It's your share, but from an admin point of view, it's basically nigh on impossible for the company to contact every single shareholder and say, be part of the action. And like I said, they wouldn't want to do that anyway because they can get money faster, quicker by the institutional boys. So there is a way to get in on some of these retail tranches, because like I said, let's say it could be 85% institutional and 15% retail. It could be 5% retail. There are normally still some chances for retail investors, the likes of you and I. But if you're not going to get a communique from the company, also, when you have a placing, it doesn't it's not classed as what we call a corporate action. If you log into your platform with Hargreaves Lansdown or AJ Bell, often you will see corporate actions, and you will be asked to look at things or even vote for things, for various important things like demergers or stock delistings, even all sorts of things. But a placing is not deemed to be a corporate action. So again, the company's not obliged to find you, track you down and tell you what's going on. That's why you haven't got any knowledge really what's going on in the placing. However, if you download an app, it's from a firm website called primarybid.com, and put your details on there, then you will get notified of all these share placings, the retail tranches that are available, and then you can get in quickly, hopefully, and get a slice of the action, buying these shares at a discount to the market value, which is always a good thing. Now, it really is a question of first come, first served. And also, they tend to be fully subscribed very quickly. Often these things are announced at 7 a.m. before the stock market opens, or after hours trading, after it closes. And like I said, the retail boys, the institutional boys, snap them up, most of them, but there is a little bit available for retail, and the best way to access it is via this primarybid.com on the app. Get the notification, get the email, and then if you like it, bang, you get straight in and get some shares. There is rules that say that on the stock market that basically if you are potential shares for retail investors, for the likes of you and I, and there is no prospectus, then the maximum amount that you can raise is only just over 7 million for the retail tranche. Again, this is why the companies are not really interested in the little guy when it comes to these placings, because they want to get tons of cash really quickly. But like I said, you want to get in, there is a limited amount available, and the whole thing is to get the shares at a discount. So that is what a share placing is. I'm going to do separate videos on open offers and on rights issues, but share placings, do have a look at the primarybid.com website and see what it has to say, and download the app and then get notifications and see if you get some bargains. So if you like this video, do subscribe right there, and I will see you soon.